AGI Greenpack reported what was a strong set of second quarter numbers. Their volumes have been driven by strong demand from beer, liquor and non-alcoholic segments as well. We have with us Sandeep Sikka, who's the CFO of AGI Greenpack, joining in to discuss the earnings in detail. Mr. Sikka, hi, welcome to the show. Well, let's start with the overall performance of the company this quarter. If you could break up what the volumes were this quarter for you all and what are you all anticipating in the second half?
So basically, if you see, we gave the quarter one results and the quarter two results. The quarter two performance is much better because of two reasons. One, the overall demand in the market is still very strong. We had lower sales in quarter one because we had a planned shutdown, which is complete in the month of June. And after the expansion come the relining of the furnaces. Now the overall capacity utilization is at around ranging 95-96%. We still have a leeway for good growth going forward, given the fact that we invested into 154-ton high-end cosmetic glass furnace, which is still operating at around 65-70% capacity utilization. So I think the guidance which we had given for 15 to 18%, growth momentum, we'll continue with that even during the second half.
So you will continue with that in the second half as well. Mr. Sikka, margins, you had upped that guidance from 21 to 23% to around 24%. And from there itself, we've seen further correction in power and fuel prices. Do you think you will be able to up that margin with increased utilization?
We had given guidance of a margin range between 21 to 23%, given the fact that part of the commodities have softened. And we feel that it should be flattened now, not seeing major fluctuations. And as a result of which, slightly the selling prices have also come off. So the margin momentum also, the margin range actually we should call around 21 to 23%. We should be able to maintain that.
Okay, 21 to 23%. Mr. Sikka, good morning and thanks a lot for joining in. This is a stock, your stock has given great returns to shareholders. In fact, I think in the last 6 months, the stock has more than doubled. So there's definitely a lot of hope as well on what the future could look like. For FY25, you had put out a revenue target of 5,000 crores. Are you on track to meeting that? And how do you plan to do it? What could the big growth triggers for the company look like over the next 2 years?
So when last we had discussed about a 5,000 crore plus turnover in 2 years, that is contingent on, our acquisition of the largest glass manufacturing company in India, which is Hindustan National Glass, for which, we had made a bid and we have been, successful resolution applicant. They have a capacity of odd 4,300 tons per day, but the operating capacity for the last 6-7 years is somewhere around 2,700 tons per day maximum. So with the consolidation, this process of acquisition right now is under litigation in certain courts. We have won those litigations at ANCLAT level, but those litigations have now moved to Supreme Court. And we are very hopeful that in next 3 to 4 months, we should be, clear those things. After which the whole phase of consolidation in terms of, really investing into this acquisition, this company, in terms of building up newer furnaces and other things will start. And as a result of which, I think in next 2 to 3 years, once the acquisition is done, we should be ranging, our turnover 5,000 to 5,500 crores plus.
So you're saying in the next 2 to 3 years, so you're not confident of achieving that 5,000 crore target by the end of FY25? You think it's a fluid target?
So basically, this is all contingent on the date of acquisition.
Okay.
So once you acquire the company under IBC process, then you have to invest into the whole upgradation of the furnaces. And some of the times it do take time in terms of really building the furnaces to the best of the standards. So turnover will definitely start flowing in, but improvement in profitability will definitely take another year or so.
Okay. What would that do to your balance sheet? Because if you're targeting revenues on an anticipated basis of around 5,000 crores in FY25, I think you have targets of reducing your debt to 500 crores by the end of the year. But eventually, would the company take on debt in order to fund CapEx, any other further acquisitions? What would the consolidated balance sheet look like, say, by FY25?
So the overall debt, since this is a bigger acquisition, so we are acquiring this primarily the sources of debt, and over a period of time we'll raise the equity. So we had given a guidance that in 2 years, the debt level will move in a range of 2,000 to 2,500 crores post this acquisition. After which, with all the profits which we are going to earn and also the equity issuance, if we do, the debt levels will definitely come down.
All right, Mrs. Sikka, just wanted your thoughts on when you start getting optimal utilization for Hindustan National Glass, in the sense that by when do you anticipate this acquisition to happen? Because of the litigations, etc., it's been delayed. And secondly, your new furnace, which is currently around 70% utilization, by when do you expect that to normalize to your overall utilization of over 90-95%?
So if you see, this new furnace is a high-end cosmetic glass furnace, for which already the pitching with the international clients is already happening now over the last 1 year. And we have been fairly successful in building up and ramping up the capacity to this around 65-70%. So I think in next 12 months, we should be able to fully load this plant to a level of 90% plus. On the acquisition side, we feel that in next 3 to 4 months, major chunk of litigation should get clear off. There were certain litigations on the processes, which, the company and the overall, the process which was adopted by the bankers, that has been already, been reviewed by NCLAT, and they gave a favorable order. But Supreme Court is yet to, opine on the same. So we are waiting for that. And after that, we feel it will be very fast.
Okay, all the best, and thanks a lot for joining in. Appreciate your time here on CNBC TV 18. Well, that's the word coming in from AGI Greenpack.